One thing big supporters of crypto are saying, like Kevin O'Leary, I know Kevin O'Leary is very active trying to pass legislation with the US to try to get some regulation. They say that once the US starts regulating cryptocurrency, that it's going to be very, very, very good for everybody. It's going to increase the prices because then institutional investors could maybe start investing in it as well. What's your take on that? On the regulations? You think that it's coming? Does it look good? Does it look bad? How long do you think it could be? And do you think it will attract a lot more, sovereign funds, institutional investors, which make up the bulk of the investors in the world? It's not the retail investors, it's those big sovereign funds. So what do you think about that?
There's no question that there's not enough clarity from regulators on how various business activities should shape up in the space. There's a lot of exciting things emerging. We talked about NFTs, staking, and DeFi. And so it's time for regulators to give that guidance and that clarity to exchanges. You have financial institutions, banks, who don't know if they can hold crypto on their balance sheet, how they can offer it appropriately to customers, whether they're retail or accredited investors. They're not sure. And so they are sitting on the sidelines. They'll continue to sit on the sidelines. But certainly in the last few years, you have to imagine everyone, regardless of age group or comfort level with the space, was asking their broker, their bank, can I just buy this through you if they were interested? And those people all had to say no. And so, it gave rise to a number of successful structured products like the ETFs, or, go to a crypto exchange and just buy direct. So I think that that's still, 6 months to a couple years away. I think it'll be an ever evolving conversation. Some stuff will be gotten right. Some stuff is going to need to be tweaked. I think it's fairly positive in general. In 2013, there was a C-SPAN hearing that I watched where, as Bitcoin was going from about $50 up to, I don't know, 500 or something like that, it starts hitting the radar of a number of government agencies, and they broadcast this hearing calling on Department of Homeland Security, the SEC, everyone come out, tell us what you think about this thing called Bitcoin, which no one really knows what it is. And one by one, these agencies said, we're not here to try and squash out a new technology. It may require us to retool, to come up with better guidance, to hire new staff, train, build new products, whatever it's going to be, to monitor that set of activities to make sure it's being used in an appropriate way. And here we are, 9 years later, 8 years later, and it's still basically the same conversation where if you look at that executive order from the Biden administration a number of months ago, they are calling on all those same agencies and saying it's time to clarify what appropriate use will be of this asset class. And so we need clarity from the IRS. We need the SEC and the CFTC to come to consensus on definitions for what's a security versus commodity. And part of that executive order was to say the US has done well leaning into new technologies to be a leader, in the world for what the internet and computing technology can be. And crypto is the same thing. There's an opportunity here. It's part of it. And so again, not everything is going to be done right. Not all of the guidance is going to be friendly to the crypto community, but it's a starting point. It's a jumping off point, and it's going to allow businesses that have sat on the sidelines to start getting more involved and give comfort to potential investors who want to say, I'm going to wait and just see how this shapes up a little bit more before I decide to dip my toe in the water. But again, that's also where some of the alpha is, or some of the asymmetry is more pronounced, because you want to be in before that happens.
Yeah.
In 10 years, when Bitcoin has established a 20-year track record and Ethereum is a $2 trillion asset with less volatility, the asymmetry is not going to be as pronounced. And so there's nothing wrong buying that asset then. It's just, if you
it would have been
come in a
better
little
to
bit
buy it
earlier
now. Yeah.
Yeah, I mean, if you do a lot of reading and you've got conviction and you kind of take that Warren Buffett approach of don't buy something you don't want to hold for at least 5 years, if you have enough conviction, then there's probably a lot of upside in some of these assets. But it does take focus and ignoring the junk
Ignoring the
that's
noise,
out there, and also turning your stomach off to the volatility of what the price is going to be. Again, people who thought Bitcoin was a good idea at 50,000 should be thinking, well, it's twice as good of an idea at 20,000. And I can lower, I can dollar cost average down here by buying now. Nothing about the narratives have changed in the last 6 months. None of the fundamentals of these platforms is any different. The developer community is still there. It's really just price and I guess media sentiment that has shifted what the headlines are saying. And so I'm in an advantageous position of, I don't really follow any of that stuff. I'm on crypto Twitter. I'm watching what's happening in the developer community. I'm part of Discord conversations, and I'm focused on what tooling is getting created right now. And valuations are a bit more reasonable if you want to invest in private companies or startups. Now is a great time because capital is drying up. And so if you have that conviction, this is a really good buying opportunity.
Yeah, it is a good opportunity. Just like the overall stock market right now. I mean, like you keep saying, that the point I hear over and over is, focus not so much on the price, but on the underlying, which in this case is the technology, the platform, the possibility. And the same thing goes in the stock market. Don't focus so much on BMO stock price or Enbridge stock price or Apple stock price. Like, you're focusing too much on it. Focus on Apple, the company. Is it really worth 20, 30, 40% less than 6 months ago? Crypto is like maybe 40% less, depending on which one it is. So focus not so much on the price, but focus on the underlying. And if you strongly believe in it, now is actually a great time to capitalize and get that alpha.
One's little difference there is it is easier, certainly in these mature companies, to look at DCF models.
Yeah, fundamentals.
I don't know if your viewers are familiar with like discounted cash flow models, but it's easy to apply something like that to Apple and say, here's what the cash is, here's what we believe revenue is going to be, X% growth per year. You can kind of come up with a valuation framework.
Yeah.
It's very difficult to do in crypto. It's still really early on. So I actually have a fair amount of abrasion with my CFO about, can you do a DCF modeling for Ethereum and Bitcoin? My answer is no. But that is one separation between established businesses in the stock market versus crypto. I think it's really hard to figure out what the value of these things are going to be. It's really a more venture-like bet that, you believe that there's going to be a lot of really interesting development activity built on top of these protocols. And that's the bet. The bet is that value will accrue down to that base layer based on whatever verticals emerge. And it doesn't matter. The reason I personally like investing at the protocol layer, the Bitcoin and the ETH layer, versus trying to buy metaverse land, I don't want to speculate on what the next vertical is going to be. I don't know if, Decentraland is the one that's going to be the right metaverse. And I don't know what NFT project is going to be valuable, if any of them. But I do believe, people are using the blockchain, they're paying fees. And so I'm just going to go and buy that piping and that infrastructure and let other people speculate inside of the verticals. Doesn't mean some of them won't be successful, right? But I think that playing at that base layer really is the key to success and lowered volatility.
Yeah, and like the Romans said thousands of years ago, fortune favors the brave, right? So now is a great time, I think, to get into the game. So let's talk a little bit about your relationship with Purpose Investments. So Ether Capital, your company, helped Purpose Investments launch their crypto ETF. So what's your partnership with Purpose?
So Purpose, is a leading ETF structured product manufacturer. They want to lead what products can be created and not just replicate the same mold that's already on the market. And so Som early on was a big supporter. Som is the head of Purpose Investments. He's the chairman of Ether Capital. And so he's been talking for years, even before I was involved in Ether Capital, about, can you just create an ETF for this asset class? Can you give an access point or a way to get exposure just through traditional brokers and websites where people would buy their stocks, whatever that software or interface would be? Could you do it? And the regulation wasn't there yet. There wasn't enough clarity. It wasn't clear enough if the market was deep enough to support an ETF. And so Som was looking into this far before my time. And the landscape of crypto and infrastructure really started to change in that 2017 era to 2020 timeline, where one of the reasons you couldn't get an ETF approved back in 2017 is we didn't really know what custody was going to look like. We knew that you could go and buy a USB key and store, half a Bitcoin at home, but it's a different thing when you're an institution or you're going to have $500 million sitting in some address. What does custody look like that's appropriate to bring an ETF to market? And so somewhere around early 2020, the discussion kind of came back, and Som said, how would we do this? Is there a custody solution that would work? Is the market deep enough? How could you help a regulator get comfortable that it's appropriate to bring an ETF to market? What is best execution going to look like? How are you going to buy if you have one day and someone wants to buy $300 million of Bitcoin? How would you source it? Do you have the right OTCs in place? Do you have the right workflow to purchase the asset from the OTC and get it into the cold storage for custody? And so that was my role. My role was to solve that workflow and to make sure that regulators were comfortable with what we were doing, that it was going to be a best-in-class product, and to help them cross that finish line of, it's time to greenlight this product. There's certainly demand in the market, demand from people who don't want to sign up on a crypto exchange, buy the Bitcoin or whatever it is going to be,
Right.
and either hold it on the exchange or use a self-hosted wallet. There's a different part of that barbell where, sure, there's crypto natives and tech enthusiasts who are comfortable doing this stuff. There's also my parents who want to buy Bitcoin, but they don't want to do this. They want to do something else. And the something else is that access point that we created. So that's where the ETFs came about. That was my role. And then in an ongoing way is to help Purpose think about what are the next products that we create. Is it more token exposure? Are there ways to help them build out other digital products that would help advance the industry, advance Canada? These are ongoing discussions we're constantly having. So I'm the crypto brain that they plug into and say, are we thinking about this the right way? How can we evolve our thinking? Is there an opportunity here for us? What's the next move to help Canada and the industry push forward and bridge those gaps between traditional finance, and this emerging asset class?
Yeah. So I'll say thank you, first of all, to help make that happen, because a big reason why I didn't want anything to do with crypto at the beginning was because I don't want to get a wallet and go on a website and do whatever, a Coinbase, or I didn't even want to think about it. But then when you have Purpose launching these, the Bitcoin ETF, the ETHY ETF, and now they have other ones. Okay, now it's something that I'm comfortable with because I'm a retail investor. I have stocks, I have ETFs. So it's a lot more accessible, and more retail investors are much, much more comfortable going about it that route than getting the wallet or going on these websites. So I think it's a very, very convenient and no nonsense way to do it. You could get in your TFSA, all accounts, right? You could access these ETFs in all accounts. And I think Canada is even ahead of the US on this. They're not even allowed doing it on the US yet. So I'm pretty sure, the US will catch up. They always do. When it comes to new technology, the US has to be there. So my channel is all about passive income. It's literally called passive income investing. So the bread and butter of what I invest in is typically covered call products, yield oriented products. And there are the yield oriented Purpose ETFs out there, so where you could get income right in the form of options. So what is Ether Capital's role with these specific yield oriented products? Is it just consulting? Is it the same like the non-yield products? How does Ether and Purpose work together on these?
This will be the least exciting answer of this entire show, because we're not involved in the specific strategy. The strategy of those products would be up to someone else. Yeah, that's up to Purpose. And so our only involvement is making sure that the execution from a crypto standpoint is appropriate, and to make sure we're limiting risk wherever we can, and trying to ensure that none of these products go south because of a technical error, because of third-party services that we've engaged or interfaced with. So we're really only involved from that standpoint, but not the actual strategy of the product.
Okay. So I have a couple of other questions. We'll see what you answer. I understand that you're not entirely involved with this, but maybe you'll have a perspective on this. So many of my viewers that have, myself included, that have invested in these crypto ETFs, they're kind of worried, right? Because obviously, when you have an ETF that's specifically tied to something, and that the price goes down, the ETF will fall, right? Bitcoin drops by 40%, that ETF will drop by 40%. So obviously we know why the prices fall, but also the yield falls as well. So what can you talk about, or what can you say about that? Does the yield follow whatever the price of the asset is? I mean, do you think that the yield will increase as the price increases? I'm not sure how far you could comment on this, but your input would be greatly appreciated on maybe appeasing people's fear on the recent drop.
Yeah, I mean, you would assume that on a price increase, the yield would go up, but it really depends on the specific design of the product and what the strategy is going to be. So I would encourage people who haven't read the public filings on any product that they're buying, whether it's what we're talking about now, the Purpose Yield ETFs, or any of the other covered call products that are on the market, reading those documents is certainly important versus just going out and clicking a button. I can't speak to the specific mechanics just because of legal reasons. I can't chat about the purpose one specifically. But I think, again, this is about people's long-term view. And I think a lot of people look to these yield generating opportunities, whether it's through an ETF or it's I'm going to go buy a stable coin, and I got an advertisement on Google AdWords that said that some random platform can generate 7% yields on stable coins, and
right.
it's safe and they should go and do it. There's clearly a desire from people to say, I don't want to touch crypto, but maybe there's a way that I can remove some of the volatility but still benefit from the activity in that space. And so I think this is going to make a lot of investors pause and think about what their strategy is with this asset class. Do they want to take on still a lot of the risk or a lot of volatility? Maybe they didn't realize they still had so much price exposure, even though the product may be focused on yield. It's still tied to a very volatile asset class that is going to change what the yield is, or what the underlying price of the asset or the ETF is going to be. And maybe they pivot their thinking and say, I don't want to buy those products anymore, but I still want exposure to the asset class. I'm going to go out and buy, price exposure to just Bitcoin and ETH direct instead, and adjust my time preference. So I think a lot of investors, and this is not specific to anyone focused on yield generation, I think this pullback in price pretty much since the start of this year, this is an opportunity for investors to refocus their portfolio and their thesis on why they wanted to invest in the asset class specifically and what the best strategy is for their portfolio and what their time preference is. There's some people who have a shorter time preferences because they're nearing retirement and they don't want to take on the volatility. Maybe they were going to say this wasn't the right asset class for me. Young investors might say, okay, I use this as a way to dip my toe in the water and learn a little bit about the space. Now I'm more comfortable in going and buying Bitcoin or ETH either through an ETF or direct exposure by holding the asset. I think this is going to make people refocus what their intentions are in a very positive way, despite there being some short-term pain along the way. It will encourage people to do more research and reading.
Yeah, I agree with what you're saying. Right, it's all about your personal time horizon, tolerance, volatility tolerance, risk, and things like that. So I mean that's good advice to really focus on yourself. So here's a question: do you think there's any chance that, because there's still a lot of people out there, including Warren Buffett, Charlie Munger, and all these people, that it's a scam and that Bitcoin and will go to zero? It's going to go with Peter Schiff as well, right? The big gold guy. Do you think there's any chance that Bitcoin, Ether just goes to zero? It just ends up being nothing. What do you think about that?
I'll separate the two thoughts there. The first is, I don't think that crypto is a scam. Even if it went to zero, I wouldn't change my thinking into that it was a scam. It's an experiment. And the question is, does the experiment have legs, longevity, and merit or not? So even if crypto went to zero, that test over some period of time of trying to run software or algorithmic-based monetary policy on distributed systems will advance computing science. It'll advance databases. It's going to advance a lot of computing tech. And so that's a very positive thing. So I don't think it's a scam. Is there a possibility that crypto goes to zero? Sure. I don't think it's very high. I think that there's a much higher chance that crypto is going to go to zero in 2012 than there is in 2022. I see hundreds of thousands of developers around the world and millions of people now working in this industry. It's hard to imagine that it's just going to disappear overnight. So I don't really have concerns about that.
I think, like you said, the further we go in, it's been over 10 years now. I think it would have went to zero already. It hasn't been the case. Yes, there's volatility, but like you keep saying, think about the technology, the uses, and there's developers, and there's more and more and more activity going on and potential here. So, I mean, I think it makes perfect sense. I'm also along the boat where I don't think it's going to go. I think it would have, if it would have went to zero, would have went to zero already. That's just my opinion.
One of the ways that I think about this is a lot of what they are hung up on, skeptics, is that they can't imagine what digital scarcity would look like, or if there's even such thing as digital scarcity.
Right.
If you read Peter Schiff's complaint, he's constantly saying, well, you can just create more of them. And that's not exactly true, because sure, you can clone Bitcoin and you can redeploy it 1,000 times. It doesn't mean you're going to have a community or social buy-in on any of those other networks. And so I draw this parallel to, Twitter. Where Twitter's not valuable because they have, I'm making up numbers here, but 1,000 data centers around the world and X number of computers. That's not what makes Twitter valuable. Twitter's valuable because there's now consensus around what the town square and short form communication in real time in a public forum is going to look like. That is why Twitter is valuable. And so same with Bitcoin. Bitcoin's not valuable because it can't be duplicated. It's because you can duplicate the code as many times as you want, but the community has rallied around this specific implementation and build infrastructure around that set of standards. And so the other thing is to look at the not to be ageist here, but a lot of the critics are born in a different time where, again, they didn't grow up with computers. The idea of digital scarcity to them is harder to imagine. And if you think about where the world is going in terms of technology, but also the next generation, what are they going to be more comfortable with? They're going to grow up never knowing what paper money is. A 10-year-old today probably looks at paper money and it's such a bizarre idea, or a bank account being closed on the weekend. Things that are more digitally native are going to make more sense to them. They're going to grow up thinking that the sword in Fortnite is valuable because it's scarce, because they want it and it's hard to get. And so the line between money and NFTs and art or digital ownership, like, it's going to start to get very blurry. And so that to me is telling where this is all going. That as that generation moves up, it doesn't matter what Charlie Munger thinks about Bitcoin. It doesn't matter what Warren Buffett thinks about these things. Is there going to be more social consensus from that next generation? And my answer is absolutely there's going to be. The last thing I would add into there is, when you think about property rights or digital scarcity with property, you could make the same arguments about domain names. Well, why would, Amazon.com, why as a domain is that more valuable than random letters or numbers? I mean, they're both, you typed 5 things into a keyboard,
right?
But there's a reason why people want a 4 or 5 letter domain name, in that if it spells out a common word, it has higher value than a random domain name. So we've already seen over time that digital property can have scarcity and that there can be value assigned to this digital scarcity. And the market will determine what that value is. And it's not to say that, by the way, any of these or all of these experiments are going to work. Time will tell. But I think there's a lot of reasons to be bullish on the asset class and to recognize that this isn't just a scam that's going to go to zero. There is something happening here.
Yeah, I agree. I agree with that. And like you said, the older, it's more the skeptics are more the older generation. Even in my community, it's typically more the retired folks who don't really understand, don't really use online as much. Whereas if you talk to a Gen Z, I mean, I'm a millennial, so, and my whole career was in the tech industry, not really the technical portion, but the managerial portion. But I understand the power and the technology, and we use it, every day. But then I'm someone who knows about this stuff, and when you talk to a Gen Zer, sometimes it's like you haven't, they're talking about all this crazy stuff. So it's like you're behind. So who knows what the next generations, and I feel like it's really the newer generations that are more into this. So really, really cool answer. Really appreciate that. Maybe one last question. I've been having you here for a long time. I really appreciate your time, by the way. Sorry for the hold up. I don't know if you could even comment on this question, but I'll try anyway. Do you think now is a really good time to get in to invest in crypto? Do you think now is a really good starting point, entry point, let's say?
So there's no way to answer this question. There is no answer. This is not a market that you can time. It's always been impossible to time. I find the idea of trying to momentum trade this asset very tough. The people that I know who have had some success in the space have not come from people who are trading. There were people who bought the assets, believed in the fundamentals behind those assets, and just held them. And they held them through the up times, they held them through down times, they held them maybe through multiple cycles. And so I would encourage people not to try timing an entry point. If they do want to time because they just want to feel better about what the price is that they're buying the asset, maybe then they say they're going to dollar cost average across 6 months and say, well, it's the best I can do. But where the price goes from here, way too hard to know. We've seen that the asset class is certainly tied to long-term interest rates from the Fed. We've seen that it's not untethered from the equity market, at least for the time being. And so there's just no way to know what's going to play out, globally in the next 6 months or 2 years that may push the asset class up, that could push the asset class down. Right. To me, this is again it's a 5-year time horizon like bet. I don't think it works in 6 months or 2-year chunks. I think you got to go in a longer 5 to 10 year period. And so, yeah, I mean, a lot of investors came to the space in that second half of 2020, and they were buying it just because it kept going up. And that was true for a very long period of time where you didn't really see a recycling in the price. between a couple different key markers. That didn't really happen from 2020 till I guess the end of 2021. And so a lot of investors just showed up and, everyone was making money. And so it just kind of had this snowball effect of people FOMOing in.
Effect, yeah.
But now it's washing away a lot of that hype, and it's going to force people to think a little bit deeper about what their time horizon is. And again, I don't think this is a good space to say, I'm going to come in, I'm going to buy, and 3 months later, I'm going to double my money and get out. This is a terrible asset class to do that. Yeah. So, when is a good time to buy? No one really knows. This is focus on fundamentals, focus on blue chips, do your homework. Don't buy the new speculative flavor of the day just yet.
Yeah.
Or don't do it with all your money or all of your crypto exposure. And then do reading, become part of the community, join Twitter, read on Twitter. There's a lot of good information. There's also a lot of bad information, but I do find that Twitter is good if you can follow the right people, to get past kind of the mainstream headlines, because a lot of those are just focused on the daily price movements. Certainly negative stories float to the front. And I'm not against reading the negative stories and understanding why hacks and thefts and over-leveraged companies are dissolving. That's important stuff. But I also think it's good to know what are the key developments happening in these protocols that may drive positive price action in the future. So Ethereum merging ETH1 and ETH2, doing this big network upgrade, could that be a catalyst? Probably. That's something I'm really excited about. That doesn't really make the front of CNBC most of the days.
No,
so
just
the
price.
More people,
right.
So the more people can join these conversations and communities on Twitter and see what's happening and do research beyond just a few clickbaity mainstream articles, that also helps, I think, with conviction for the long term.
Yeah, I think you're right about that. And the way I look at it is, I strongly believe that investing in the yield-oriented, ETFs from Purpose, the Bitcoin one, the Ether one, is literally the safest way in the world to invest in crypto right now that I know of. Because number one, you get it in the form of an ETF, right? And Purpose is a trustworthy ETF provider. So you have that security. You could put it in your TFSA, you could put it in your cash account. That's number one. So you could avoid, any of those coin wallet scams or whatever. That's number one. Number two, you're getting it with covered calls. Covered calls just makes everything less volatile, more defensive by nature. That's what it does. Plus, it's giving you a monthly income. So you're getting paid while you wait. It's a perfect thing with this asset class, because if you believe in it long term, well, I'll get a bit less volatility. I'll get a bit of income every month. Of course, that could fluctuate greatly, but at least you're getting that income from covered call options. And the third reason is you're investing in the blue chip ones, the Bitcoin and the Ether, the two biggest ones. So that's the only way I would ever invest in crypto for now. That's how I invested in it. But I always suggest for people, make sure it's not 50% of your portfolio. Go with, everyone has to make their own decision on how much, some people it's 5%, some people it's 10%. So anyway, Brian, listen, I kept you for way too long. I apologize for that. This has been great conversation for me anyway. I hope my audience appreciates it. I've learned a lot about Ether and the crypto landscape. So I just want to thank you very much for being here with us and answering all my questions.
Thank you for having me. And if anyone has any further questions, it can always be found on Twitter and LinkedIn. Happy to guide people in whatever direction for whatever information they're seeking out. I'm happy investing and hope to be back soon.
Perfect. Thanks, Brian. I'll put your info in the description below. Thanks, everyone.
Sounds good. Take care.
Thanks for watching, everyone. Really appreciate it. Make sure to hit that like button, that thumbs up button. It helps the channel grow, so it's a win-win. Also, make sure to subscribe if you're not already subscribed, not to miss out on my future content. It's all about income-focused investing. And also, you got to be subscribed if you want to participate in my surveys, where I ask the audience, I ask you what topic you want me to cover next. So very important. Subscribe, hit that little bell button so you are notified of any new videos and any new surveys as well. Make sure to check out our website. We have a website, passiveincomeinvesting.ca. That's where you could purchase my digital product that I'm very proud of, the ultimate DIY investing package, which is on version 3 right now. So this is a reference tool. It's a companion tool to help you build your own custom portfolio. It's good for Canadian investors and American investors. So it covers both the Canadian and American stock markets. It has sample portfolios as well, multiple sample portfolios for different investing styles. So it's a very cool product, and it does come with life lifetime update. So you only have to purchase it once. My intention is to come out with a new version every single year. So you purchase it once, you never have to pay for it ever again. You'll get the lifetime, the updates for free forever. Also, right there on my homepage on the website, I do offer a one-on-one coaching session. If ever you want a little more personalized help, it's a 1-hour Zoom call with yours truly, a one-on-one with me where you could ask me anything you want. We'll go through your situation and I'll give you my opinion on how best, I'll help you best I can, basically based on my opinions. Just keep in mind that I am not a licensed or registered financial advisor or financial planner. We also have a Facebook group, so join us there. Passive income investing, over 11,000 members. We try to get the spams and the scammers out of there as quickly as possible. So it's a very, very clean group. Everyone's asking questions, trying to help each other. And it's a really, really cool and fun community. If you want a little bit more personalized stuff on our day-to-day life, follow us on Instagram as well. We recently moved to Panama, so if you want some more information on more personal stuff, you could follow us on Instagram. My mission, the mission of this channel, will always remain the same, everyone. It's to help everyday, regular, normal, working people to invest on their own, do-it-yourself investing, right, in order to build their own stream of passive income to enhance their quality of life and one day become financially free, financially independent. Very important goal. So, as usual, I continue to stay safe, everyone. Stay healthy, and of course, stay passive. See you next time.